Okay, let's welcome on board Pankaj Pandey and find out what fundamentals are we working with this Thursday morning. Pankaj, hi, good morning. While, of course, the STRIX Nifty is indicating a positive start, good support from global cues, a lot of stocks as well on our radar. And I want to first start talking about Z, Pankaj. Given the CCI approval now to the Z-Sony deal, are you significantly upping your targets on Z now, considering this was the only overhang?
Hi, good morning. Thanks for having me. I think we still don't know the final details in terms of what kind of, whether there will be a drop in some kind of a GC channels and regional channels. But having said that, we already had a buy rating on the stock. Our sense is that ad revenues recovery is expected to happen given the festivities which are expected to come up. So from that perspective, I think within the media and entertainment space, Z looks quite attractive to us. Overall, our sense is that besides this, from a consumption perspective, I think Phoenix Mills is another company which one can look at, given the fact that it's a broad-based proxy for overall consumption.
What's the expectation when it comes to demand commentary, margins rebounding, etc., when it comes to the IT companies that are slated to come out with their earnings? Given the fact that last quarter we did see strong growth, what are you penciling in now for the coming quarter?
So for this current quarter, for tier 1 names like say TCS, Infy, Wipro and HCL Tech, we are expecting about 3%. 5%, 4%, 3.5% kind of a constant currency growth. I think obviously you will have a constant, you will have currency headwinds, and that will sort of lead to lower growth by 1.5%. But our sense is that worst is behind us in terms of margins. So we are expecting TCS margins to improve from 23.1 to 23.6. Similarly for Infy from 20.1 to 20.5. So overall, I think numbers are expected to be okay. I think the commentary in terms of overall future spends is what will be crucial. In terms of preference, our sense is that Infosys, TCS, Coforge, Mindtree and Persistent are looking attractive to us. Given the fact that for a company like Coforge, we are expecting about 4.5% kind of a constant currency growth. And for Mindtree, it's about 5% kind of a constant currency growth.
Right. Kunal, let's pick up on some of these charts because Z will definitely see a significant price action today after the deal going through at CCI. Are the charts indicating the same? Because even on Tuesday, we had a solid 7% move.
Yeah, I think, so my sense is that the prices could probably have, factored in maybe slight bit of, the inkling in terms of the news flow, but then, there was no major change in open interest for Z Entertainment. That was one of the biggest highlight. Even though the price volumes on the cash side was slightly higher, I would not say it was at a multi-week or a multi-month high for Z Entertainment, but it was slightly higher than the average over the last 3 to 4 days for Z Entertainment. So I think the markets would definitely be taken by a positive surprise. And what this could probably also do for Z in terms of stock price is finally take the stock past about that 275 hurdle, which has been a huge resistance for Z at least over the last 6 to 8 months. This was a zone where the stock took multiple resistances, rallies, closer to this resistance failed for, the stock, and we've seen many times the stock correcting from those 275 hurdles. So when a stock generally breaks out of a major resistance, that, tends to act as a strong support over the near to medium term going forward. So I believe that that could be a stance for Z Entertainment. Now, depending on where the stock opens up, I think 275 could then consider to be a good base or a support for Z Entertainment, and keeping that as a support risk reward. If the risk rewards are favorable, depending on the opening price, then I think initiating fresh longs could also be a good trade.
Naresh, let's get in your take on IndusInd Bank. What a mover it was on Tuesday's trading session, wrapping up at those highs of 12.19. What's the outlook on the charts? And if you could also squeeze in a Bandhan Bank, given that that stock too stood out within the entire financials basket.
So IndusInd looks very promising for the fact that the stock has saw the sharpest recovery from those lows of 750, 800. Secondly, in the near-term correction also, the stock did not see as much of a deep correction, which generally is seen for the stock because it's been a high beta stock. And now is not very far away from the recent highs. So the recent swing highs were around 1275 and the stock was at 1220 on Tuesday. Also, the highs back in January 21 was around 1235. And pre-COVID, the stock used to be closer to 1300 levels. So this 1250, 1300 mark is a resistance. Once it crosses, that would be an indication of a major momentum shift here in terms of outperformance. So for now, it has just been recovering from the correction from COVID times. But once we cross that, it could be a much bigger move. So out here, positive on the stock at current levels would keep a stop loss at 1150. And if this trade actually moves out, it could go all the way to 1600. On the other hand, Bandhan Bank has been a terrible one. The stock has shown multiple starts over the last 3 months, but there has been no follow-up buying. Rather, every time the stock breaks out on short-term charts, it tops out in the next couple of sessions. It recently broke also the swing low of June, July, and again we are back about. So it seems like a stock which is only whipsawing on either side. So for now, not taking a view, let it actually start making a stronger trend and then maybe have a view on it.
Right. Okay, let's move on. And ahead of the earnings season, JP Morgan has upgraded Persistent Systems to overweight and placed a target price of 4,100. What makes them this bullish? Anisha joins in with the takeaways from the note. Anisha?
Well, yes, JP Morgan lays out 4 reasons why they are so sanguine on the counter of Persistent System, and the reason why they see 24% upside from current levels on Persistent Systems, and the reason, as I mentioned, are fourfold. First up, they say that the company's services are less vulnerable to the discretionary spends, and that is why they believe that there will be the continuity of spends and revenue for this company going forward. Additionally, even if you look at the client mix, they have more exposure coming in from US clients, wherein the spends are not likely to be cut that harsh versus the European clients. And this will help in the currency movements as well, because given the fact that they have higher exposure to US than Euro, they will have less cross-currency headwinds, and they will benefit from the rupee weakening going forward. As far as the valuation is concerned as well, they say that the stock trades at a discount to the likes of L&T Infotech and L&T Tech. Hence, there is that room for upside, and at 26 times the forward earnings, they see this as an attractive entry point. Also, in terms of the financials going forward, they expect the company to clock a revenue growth of over 25% over the next 3 years, and that's why they're bullish on the counter.
All right, thanks very much for giving us the latest on the JP Morgan view. In fact, let's get in your thoughts on what the outlook is then on the entire IT sector, Pankaj. Just in terms of, you spoke of results, but where you're seeing opportunity even in some of these new age tech companies, the likes of Zomato, Paytm, the recent listings like Nykaa. Do you believe that that's a complete avoid and no-no, or that we are seeing an improvement in the overall balance sheet and managements as well, taking account of profitability, and therefore it merits a look?
Well, some of the companies definitely are more conscious in terms of getting into profit territory over a period of time. But our sense is that despite all this, we still don't have confidence in terms of initiating coverage in some of these names. And which is why we have still not been chasing all these new age tech companies. And I think the challenge on the valuation still remains because when you sort of look at from traditional IT players, you have certainty of growth in the low teens. And similarly, margin profile and profit profile is quite better, along with handsome dividend payouts. So I think traditional IT names still look more attractive to us. While they have not been performing, we would expect some bit of a probably time correction to still pan out. But I think IT companies are still looking better to us from a portfolio perspective. Hopefully in the next 1 year, when the Fed sort of reverses its course, I think these IT companies can sort of outperform the markets overall.
Stay with us. I want to connect with Abneesh Roy as well, who joins in from Edelweiss Securities to give us his view on CCI granting the conditional approval to the Zee-Sony merger. Thank you so much, Abneesh, for taking time out. Just going through your note, and one of the points that I think the street is a bit concerned about is the speculation on the divestment of one of the big flagship GECs in the Hindi GEC segments, Hindi movies or Marathi. How likely do you think that is, and how much of a concern will it be?
Yeah, thanks. No, we are quite positive on Zee, and we maintain our buy, and we expect stock to do well from here on over the next 7 to 12 months. Coming to a specific question, no, we don't see that any large channel divestment will be needed. See, Zee and Sony will have extremely high number of channels, and in each genre, they'll have a lot of channels in the tail, which will be very small. So such divestment will be needed only, and in a few genres only and a few channels only. I don't expect the names which have come in the media, for example, Zee, Marathi, or any of the Hindi GEC flagship channels, highly unlikely in my view. Because see, 2-3 things are there. The market share of Zee itself has fallen in the last 2 years. Second is there has been huge consumer behavior change. So a lot of the consumers have shifted from TV to OTT. On OTT, there is so much competition from Amazon Prime, Netflix, and whatnot. So you cannot just see the TV market share to start with. So I think the overall impact will be very limited. A lot of time will be given for divestment. And of course, over the next 7 to 12 months, all the key issues which investors have will get resolved. The merged entity will be there. Corporate governance concerns will resolve because it will be Sony-dominated board. Advertising revenue will also be back. Q2 quarter will be a bit weak because FMCG companies will see margin pressure and rural slowdown. But in H2 FY23, my sense is we will see a good recovery in advertising revenue. So we are quite positive from 7 to 12 months perspective.
So where are you upping your price target to from the current market price of 268 thereabouts, Abneesh?
No, we are not changing because we never had any doubt on the merger. So we were quite positive. So based on this, we are not going to change, obviously. But as I said, over the next 7 to 12 months, easily 30 to 40% kind of upside is highly possible. So we haven't changed because we did expect this to happen because, as I said, market share is not really a concern. So currently we have around 370 target price. So we do expect in the next 1 year that to be achieved.
Abneesh, really appreciate your time. Let's see where Zee actually opens today. One is the trader. Because of the buzz, view, opinion, a lot of traders bought into Zee. Let's see how they approach today. But traders have bought it for a news and a rumor. Could it be a case of buy the rumor or sell on news on Zee? At least from a trader standpoint. But fundamentally, I have no reason to doubt that the re-rating of the stock has just about started. Cost synergies, saving, subscription cost, benefit of scale, skill, size, everything comes in. And this becomes now the go-to stock in terms of the media space. Pankaj, I'm just going to put the credit offtake data in front of our viewers. There is almost a 5% plus uptake which big banks have reported. So considering that credit offtake is strong and it is real, and the monthly numbers which most of the banks and NBFCs have reported is nothing short of exciting, which becomes a re-rating candidate within the financial space. I mean, everybody likes ICICI Bank. People are now getting bored with HDFC Bank. Some are excited about SBI. But which are the new ones now?
So I think, Nikunj, from our preference perspective, I think some of the other tier 2 names in the private banking space, say for example, Axis Bank looks attractive to us. So where we have a target price of 970. Similarly, IndusInd Bank, the target price is 1,330. Also like the smaller private sector banks, especially IDFC First Bank, where we have a target price of 160. And the Federal Bank also has been sort of shaping up well, where we have a target price of 135. I think in PSUs, SBI obviously has been sort of capturing more of a limelight. But I think Bank of Baroda is another stock which can be looked at, where we have a target price of 160. This stock is still sort of trading below one-time book. And our sense is that overall banking as a space is in a sort of a sweet spot. And I think the challenge is what we had seen in Q1 in terms of treasury losses. I think we might see a bit of a treasury gains. So that is going to help most of the PSU banks and some of the private sector banks. So overall, banking and financial services as a space is looking quite attractive to us. And within NBFCs, I think Bajaj Finance is definitely better with a 31% kind of a growth of what they've come out with. I think this is one particular NBFC which is expected to sort of do relatively a lot more better than the other NBFCs.
Naresh, what is your view on IDFC Bank? IDFC First Bank, rather.
So, very positive on the stock. The stock saw a correction all the way from 65.70 down to 30 levels. And at one point of time, the discussion was how bad the company has done for such a long period of time. We don't discuss the stock because it's done so bad. So, and then it has seen a one-way recovery from 30 to 53, 55. Now, cut to say just a year back, the stock had topped out around 53, 55 levels, made 3 tops around that area. So we are now on the verge of a breakout. And every time The stock has broken out in this leg, whether it was at 40 on the quarterly results, then again on this quarterly monthly update, the volumes have been higher. So I expect a move towards 70 as a minimum, and once we cross 70, that would be an indication that finally the bank has lived up to the potential. The stock has been at say 70 has been a problem zone right from the time it got listed back in after the demerger in 2015 to 2017. So 270 is the target price which I have for the short term, and post that also it can be a surprise. So like the stock, even at current levels, even after the gap up. So structurally, the trend has changed. The bottom is in place, and now a fresh trend starts even from current levels.
All right, let's get you some more fundamental ideas. Sanjeev Bhasin is betting on the logistics sector.
Yeah, my first pick for the day will be Adani Ports. I think the Baltic Freight Index and this China 01 is going to see a lot of traction on the, at least on the shipping side, and a lot of cargo and logistics is going to come towards India. Same is the case with Euro. And I think that both Adani Ports and the next stock which I'm going to, are going to be big beneficiaries. So at 825, buy Adani Port, keep a stop loss of 780, look for targets closer to 900 in the next 3 days. My second pick would be Concor, Container Corporation of India. Again, one of the biggest beneficiaries of traffic and logistics as far as containers go. And like I just told you, Adani Port, I think Container Corporation will be another very big gainer, given that it is a monopoly, and we've seen a lot of divergence of business from China to come back to India, and so is the case with Europe. So buy it at 680, look for a target of 785, and keep a stop loss of 650.
Pankaj, Adani group of stocks have seen a bit of a mid-air turbulence, whether it is Adani Ports or Adani Enterprises, even a company like Adani Wilmar, which is a profit-making FMCG company, you've got a great brand there. Is it a good time to buy or revisit Adani group of stocks? I mean, is it time to perhaps correct your, correct your regret, which is that you always wanted to buy them, now you're getting a chance to buy them again?
The question is for me?
That's right. Only one Pankaj Pandey on the show, sir.
Yeah.
The other guy's name is Naresh.
Yeah. So on Adani Group, I think we only have Adani Ports under coverage, and that is the only stock where we feel that the fundamentals or the numbers what we pencil in are sort of reflecting in terms of the current market cap. I think the rest of the other names, we are still sort of quite not sure in terms of what kind of numbers to sort of pencil in, because while obviously you have a lot more news flows coming in terms of the kind of growth they'll deliver in various segments, but somehow we still are not able to connect fundamentals with the current market price performance. And which is why we have yet not covered the rest of the other names. I think Adani Gas we had covered, but somewhere down the line that also we are still not able to sort of justify a number of stocks on a fundamental basis, given the numbers what we sort of pencil in. So I think Adani Ports is the only stock which we sort of like. Ironically, this is one stock which hasn't really performed with the overall Adani Group.
Okay. That's Adani Wilmar for you, 711. Rich, what should a trader do with the Adani group of stocks? These were the epic stocks which only went one way. The momentum has got challenged. Have these stocks reversed, or this is a good time to re-enter them?
So there is a pop because we've seen a 20% correction in some of them, but this is a bounce where you want to get out or reduce allocations. Because whenever, say, the stock has topped out with a 20% cut, Adani Enterprises as such, it can actually go into a sideways, say, trend, or maybe fall a little more. Also, we've seen a huge amount of rejig in the shareholding pattern. We are seeing a lot of ETF flows come into these names. So for now, the last time we saw this a year and a half back in June, July of 2021, when we had seen a major rejig in terms of ETF buying coming in, and some of these names topped out and fell 30-40% from the top. So after in the current rise, you want to get out of the names rather than get in. The only one which is relatively better is again Adani Ports, because it's not seen a mad move as such in like the rest of the names. So apart from Adani Ports, the whole basket looks like a sell on rise rather than buying this bounce.
Last one, are you saying that Adani group of stocks, Naresh, according to you, are sell on rise rather than buy on decline? I just don't want to get this one wrong for our viewers.
Yes, exactly the words.
Okay, but remember, this is Nuresh's technical view. There is a different fundamental view which anybody would have, but Nuresh feels that the momentum in the short term for some of these stocks is gone. I'm going to shift gears and talk about a stock which saw very strong volumes on Tuesday. Yes, Wednesday was a holiday, Tuesday. Blue Dart. Volumes and price action in terms of the trend, the volume action supported the price action. Pankaj, it's a 9,000 rupee stock. Why is Blue Dart trading first at 9,000? And from 9,000, can it go to 10,000, 11,000, 12,000?
So fundamentally, we are not upgrading our targets. According to us, this is hold while news flows have been positive in terms of they taking price hike of high single digits. But our sense is that a lot of it is already there in the price. I think logistics as the overall space we continue to sort of like, given the fact that if India has to sort of do well in manufacturing, the entire logistics as a space has to sort of do well. So we like both TCI plus TCI Express, along with that Mahindra Logistics, which again has a good share coming from the autos. So I think these are the set of companies which we are sort of more positive on, and I think Blue Dart obviously has been sort of doing well. I think this is a huge industry from a perspective that is a 9.5 lakh crore kind of industry, and you have various segments which are expected to sort of keep delivering double-digit kind of a growth, given the fact that you have a large unorganized segment. But having said that, I think for Blue Dart, I think the valuations are still quite rich, so which is why we have not been upgrading the targets, given the fact that while they are going to sort of, they've taken price hikes and they'll be able to maintain the margins. So really do not have much of a comfort to recommend in Blue Dart at current levels.
With us, Pankaj. Let's move right on then. And MSCI is going to conduct its semi-annual rejig on the 10th of November, effective December. Let's find out which stocks are going to be included and what are the kind of inflows expected. Somit has those details. Somit?
Well, the MSCI changes are expected to be announced on 10th of November and will be effective from the 1st of December. So MK Broking has come out with this list of stocks which they expect to be included on the MSCI India Standard Index. Now, they're not expecting any exclusions from the index, but they have listed out 5 stocks, of which 4 have a high probability of inclusion to the MSCI India Standard Index, while one of them has a low probability, and the low probability one is Indian Hotels. Now, generally a stock needs to meet 2 criteria. What is first is size, the second one is liquidity. And when it comes to the liquidity criteria, Indian hotel stock is on the borderline, and hence it's a low probability of inclusion chances that MK is seeing. Now, the 4 stocks that MK sees a high probability of inclusion are TVS Motor, Ashok Leyland, Varun Beverages and Bank of Baroda. Now, in case of Bank of Baroda, it could hold a weightage of around 0.36%, which would mean foreign inflows of close to $120 million, which is nearly 3 times of its average daily volume. When it comes to TVS Motor, the weightage is expected to be around 0.34%. Inflows are expected to be in the range of around 113 million, which is nearly 5 times its average daily volume. And in case of Ashok Leyland and Varun Beverages, the weightage is expected to be around 0.33%. Inflows are expected to be in the range of around 106 to 109 million which is nearly 5.4 to 3.9 times its average daily volume. So we need to keep an eye out for these 4 stocks which have a high probability of inclusion in the MSCI India Standard Index.
All right, Somit, thanks very much for giving us those details. Meantime, Pankaj, everyone's talking about really betting on the manufacturing theme via the auto ancillary basket. Where is it that you're seeing favor within that space?
I think within the auto ancillary space, you have companies like, say, Mahindra CI, which looks very attractive to us. I think whatever CapEx they are doing will happen in the domestic subsidiary. And that's got better margins. So that is one which we are liking. Similarly, we are liking Motherson Sumi Wiring. I think this is a company which has got 60% ROS. I think whatever tech-led improvement or features, what you've seen PV, I think this company is a sort of a play on that. And then I think from a CV perspective, Automotive Excel looks attractive to us. So I think these are some of the names which we are liking. I think auto as a overall segment has a lot more room to sort of perform from current levels. We have our sense is that probably more than 20% kind of a growth is very much possible. And I think on top of it, what you are seeing is upgrading in terms of So higher end models are going to sort of capture more of consumer fancy, and that should lead to a lot more better growth. So within OEMs, we like Mahindra and Mahindra, Tata Motors, and Ashok Leyland.
Couple of other stocks which are going to be in focus, and L&T has bagged multiple orders, we understand, both in India as well as abroad, and the order value is likely between about 1,000 to 2,500 crore rupees. This, of course, is going to be net positive. We're also hearing from Ease My Trip. They're going to consider a proposal for increased in share capital. A stock split as well is something that they're going to be mulling come October 10th. There's also buzz around Natco Pharma. They've announced a launch of 2 CTPR pesticide formulated combination products. So these also going to be, important. The estimated size of the combination of these products is about 800 crore rupees in India, that is. So this, of course, is positive news. HCL Technologies has announced its plan to hire 1,000 people in Brazil in the next 2 years, and this amidst all the news flow and the chatter that we've heard around hiring from IT majors. So this sort of arrests all the rumors and all the negative news flow surrounding them. And of course, the 2 big stocks to look out for are going to be Z as well as Bajaj Finance after their Q2 updates. Kunal, Bajaj Finance, while of course there is no problem per se in Bajaj Finance, this is one of those must-haves with the likes of an HDFC Bank, ICICI Bank in one's portfolio. But in the near term, what are the charts indicating?
I think I'm very bullish. In fact, the move which actually started off in the month of June for Bajaj Finance when the stock moved up from 5,000 to 7,000, I think has just seen a continuation. So in the last 3 months, even though on a monthly basis, on a net-to-net monthly basis, the stock has gone through a very marginal uptick for itself, but then it's maintained the trajectory after that strong uptick in the month of June 2022. So I think that's a sign of strong uptrends coming back into Bajaj Finance. Now, it's always possible that after such a big up move where a stock rises up more than 30%, 40% in a very short span of time, it consolidates for 3-4 months, gives very, very mild returns, tries to be a lot more choppy than what was earlier. But then eventually you see a further breakout move where the stock rallies up another 1,500 to 2,000 points. So I wouldn't be surprised that Bajaj Finance actually comes back to an all-time high levels and breaks past about that 8,000 mark as well. I think 9,000 could be a nominal target for Bajaj Finance, just looking at the patterns. 9,000, yes.
It's 1,500 rupees away.
Yes.
That means you mean to say, excuse me.
That it'll be amongst the first financial services stock which will actually hit a life high for itself.
ICICI Bank should be at a life high, no?
Yeah, it's already done it. Yeah. Like from now on, I think Bajaj Finance should be hitting a life high.
So when Aisha asked you about Bajaj Finance, your reaction was very bullish.
Yes.
What else is very bullish?
IndusInd Bank.
But life high is very high. I think the life high was 2,500 to 2,600.
Yes. 2,000 plus.
Which is why even at the current levels, it's
exactly. The risk reward is very good. In fact, even for Z, I think assuming if the stock breaks today above this 275, 300, 275, 280 mark, I think that could also be a good.
Which it will.
Yeah, that's so. If it will, and assuming if it's not a sell-on rallies or sell-on news kind of a even for Z, if it sustains by the end of the day, then I think it should be a good move.
What's the current life high for Bajaj Finance? Is it the 52-week high of 8050?
8,000 plus.
Okay. Okay, since we're on the subject of Bajaj Finance, they reported their Q2 update, and that's why all the enthusiasm around it. Let me take it across to Harsh, find out why the market should be bullish. What are the numbers looking like, Harsh?
Well, Bajaj Finance declared its pre-result numbers, of course, for Q2 FY23, and we're looking at provisional numbers standing at 6.3 crore is where the customer franchise currently stands at versus the 5.3 crore number a year ago. Solid 19% growth on a year-on-year basis. We're looking at a 4+% growth even sequentially, 4.3% to be exact. The new loans booked have also gone up 8% when I'm looking at it year-on-year, slightly off when I'm looking at quarter-on-quarter, but on a higher base. So that won't matter as much because the AUM growth has grown a solid 31% on a year-on-year basis. In fact, AUM has grown 7% even sequentially from that 2,04,000 crore mark to 2,18,350 crore is where the AUM currently stands at. And that is largely funded by strong deposit growth. Deposits have grown 37% on a year-on-year basis. Now, deposits stand just below that 40,000 crore mark. And when I'm looking at it sequentially as well, 15.5% growth on the deposits front sequentially. The liquidity continues to remain strong for Bajaj Finance. 9,300 crore is where that liquidity number is at. It was at 11,500 crore a quarter ago. When we're looking at capital adequacy as well, ahead or rather more than 25% is where that capital adequacy ratio is at. So solid numbers across the board where Bajaj Finance is concerned.
Paresh, do you see Bajaj Finance making a new high? I mean, Kunal is not bullish, but he's very bullish.
Yeah, so the stock looks very interesting. Whether it can sustain well above 8,000 and do a bigger move is a question mark. I expect a move towards 8,000, 8,200 in the near term.
Okay. Pankaj, mid-tier private banks, I've asked you this question, but just for the benefit of our viewers, I want to go back there again. If I look at the lay of the land, the incremental market share, a lot of CASA, market share, mind share, technology, all of them still rest with ICICI Bank or HDFC Bank or Axis Bank. The big banks are getting, or SBI, big banks are getting a large amount of CASA and also business. So why should one buy into mid-cap banks or mid-tier NBFCs?
So mid-tier NBFCs is something which we are not very positive on. I already highlighted that what we like in, say, mid-cap banks is IDFC First Bank. Now, this bank largely, I think, has been walking the talk in terms of shifting its book from corporate to more on the retail side. And mind you, retail has got better spreads. So they'll have one of the highest spreads. And so from that perspective, I think deposit growth has been sort of a challenge for a lot of banks, including a number of tier one banks. But I think on the growth side, if you're sort of moving into higher spread for business, so I think so from that perspective, I think our sense is that from a lower base, they can still deliver a lot more higher growth. I think when you look at tier one banks, while if you are expecting a system growth of say 15, 16 odd %, it is very difficult for them to sort of significantly outperform this particular number. But whereas tier two banks or smaller private sector banks can sort of easily outperform from that perspective. So you're obviously getting a higher growth, and mind you, say for example, IDFC First Bank is still trading at about 1.6 times. Compared to that, you have Axis Bank, which is in 2.3 times kind of a book. So there is a valuation catch-up some of these banks can do. Similarly, say for example, Federal Bank is trading at about 1.3 times. So from that perspective, I think you have better growth and a bit of a catch-up on the valuations is what they can do. Since overall structurally BFSI is looking positive, I think it is the smaller banks which can sort of do a lot more better. And that is what happens in the overall market also. If domestic macros are good, we've seen mid caps and small caps outperforming large caps. And something similar is what we would expect in BFSI as a segment also.
Okay, Pankaj Pandey, we'll let you go on that note. Thanks as always for taking the time out and joining in. Let's just discuss the financial space.